Good morning, everyone. It's 25th January 2017, and welcome to this episode of ProAMT Traders Digest. A lot of things to talk today. Let me go through the disclaimer first. Trading in stocks derivatives involves substantial risk of loss and not suitable for all investors. Past or simulated performance is not a guarantee of future results. All systems, indicators, strategies shown here are for education purpose only. All levels discussed here are for understanding the study and not a recommendation to trade. Please consult your personal financial advisor before making any investment or trade decision based on anything that is discussed here. We will not be responsible for any resulting profits or losses. So let's have a look at what Nifty did. So open above previous day's range, which was unlikely. I was expecting that it would open somewhere into the range, or at least open and start pushing down and stay within this broader range of 420, 8420 and the low which it made. But now what happened is instead of staying there, it directly after an open rejection started pushing up, went into this prominent point of control, and then pulled back down. But if you can see this becomes a nice demand zone here. So after that, a short covering, weak profile when it's doing a short covering, but still it is within that broader range. So any push above the broad range puts us in a situation where we need to rethink that does it want to start a new auction, or is it just a short covering move. So after this J period pushed higher, and then a pullback into the K period. K period again pushes up. Now when that clears the weekly high and comes back, now that is happening in the later part of the day, and most likely to stay there through the end, because now what has happened is all those who had kept stop loss above this would start exiting. So this becomes an easy task to then just take them off. Huge volume coming into this rise. So though it is expiry and there will be a lot of rollovers going on, but time being, the spike materialized during the day, so have to stay with that. Now the value has stayed down, and also we have a prominent POC at 8441. So won't be a surprise that due to the expiry volatility, it comes and settles there as expiry. So can be because there's no premium left actually, so it might push down into 843540 kind of zone and expire somewhere there, because then it will give the max pain to 8450 put writers. Suppose somebody is writing that put for few points, that would be a nice point to give them some pain. Another possibility is that it pushes into the 8550 zone, because then it will give pain to the 8500 call writers and then push back down. Now on the open interest front, let me show you. 8450, 8550 had the highest change uh, in open interest. So that is marked here, and the PCR, overall PCR is at 1.90, and the volume weighted PCR is at 1.29. The expected range as per OI is 83158636, a huge range due to the big number on the PCR. And as per the VIX, if we factor in the volatility and what it might do today, now the expiry being 1 day earlier, there would be, because see, the algorithms written by few prop desks and few bigger guys need to be changed for this day, because they would be having multiple strategies. So there will be unexpected moves today due to that change of day in expiry as well. The PCR at 8,400 is very strong, but this can take like minutes to just push them out, because now suppose if the highest open interest 8,400, if you can see, the change is very huge. So what happens is, somebody selling this at just 4 rupees would be in panic even if it goes to 6 rupees, because in percentage terms it's like a 50% rise. So when in the premium is very less, when the number of the on the premium is less, there are high chances that the writers would quickly move out, and they want to just save themselves, because it doesn't matter even if they sell like 1 lakh of options at 4 rupees, it's 4 lakhs. But on the other side, to get that 4 lakhs, you cannot lose 2 lakhs instantly over and above that capital. So obviously, they would run for cover as soon as any movement happens into that strike price. Now, the surprising thing is that the highest open interest is at 8,000 put. They never moved out, it seems. The rally started from 8030, because that's where our trend indicators started going up. So it's quite surprising, and then there is a fall in the open interest from 8,400, 300, 200 and 100. On the call side, not much of open interest created on the higher side. 8,600 has the highest, and 8,500 are just a tad lower than 8,600. So these guys can be in pain if it pushes up above 8,500. Now let's have a look at the 1 minute chart. So open above the range, tries to push down, and then starts going up. Now it was following a channeled move. If you can see this, let me show you. So a channeled move there, and then what happens is it goes sideways. It goes into complete balance, and okay, there's all of a sudden a download started. I thought, what happened? So there's a complete balance there, and then it starts to make its way higher. Now let's see what happens when it does that. So let me bring the annotation up. Let us draw this channel. Let us draw this channel. So it see here it looks like it is breaking down. So almost here, if we see this is, or even if this we can't, have to draw it parallel. So this parallel channel getting resisted, and then finally pushing through this area. So a nice attempt. And if the gap rules applied, so if the gap is not filled in the early, gap is not, the value doesn't shift to unchanged in the early hours, then there is a higher probability of a late afternoon rally. Now there is a fat finger somewhere here. On 1 minute bar, there is, all of a sudden somebody comes in and maybe pushes order. So a very narrow range and a huge volume generated at that price. So somebody buys in there, would be sitting on huge profits. Now after this is done, then what happens is this breakout materializes in a channeled move again. So if you can see this, so this goes and this. So we have to draw a parallel channel somewhere here. So almost tries to break down from that channel, and again makes its way up. Now huge delta coming up, delta positive all the way through, but doesn't matter because there'll be a lot of rollovers, so we don't know what is really happening in the delta. Let's have a look at the 15-minute. Now the sellers getting stuck at the lows. This is a usual story. The delta is almost zero, and then a sideways move, again sellers getting stuck, and the buyer above that takes that initiative to push it higher. Finally we see a lot of selling coming into this bar, and now selling coming in, and on the other side price is going higher and momentum is there, so this will calculate as a positive delta, this the momentum indicator. And just before that, the momentum is not there, and a huge buyer comes which is negative, and that's why this considers this as a negative delta. So this is the logic of what I've programmed, that correspondent to the price move, it calculates the delta and then shows us what was really happening. We just want a visual representation of what is happening, and that's why this today added this morning. I'll add the volume pane in the bank nifty as well. Time being just watching on this, so I have added this volume on 15 minutes as well, and this is the standard deviation band, 1 and 2 standard deviations. We want to see if the spike is coming, it is going above the standard deviation or not, above 1 and 2 sigma volume or not, because that day what we were checking as per the zones. Now this would really work well, because we also want to see these resistances, how they play out. So open above the R1, a positive bar, and creates volume. No demand is countered and never visits that price. So bullish scenario, again you get a no demand, but again you get no demand, and then again no supply here. So a no demand countered by no supply. The no supply low breaks but is not able to stay below this no demand bar. So that is again a positive sign. We get a spike here but is less than 2 sigma. So this will give us enough information of what is happening within. And Now that becomes it's the volume has gone above 1 sigma in a spike, the range expanded from this bar, so the bar low becomes an important reference, which comes at 844 8443 or 844 one kind of zone, and which we are seeing is the fairest price as well. So just adding this to combine the study, so that because see, now we are looking at the 1 minute bars, 1 minute bars on the volume, but without any identification. The UTs, STs, and all the VSA is on 3 minutes again here. So we are looking at 1 minute bars, we are looking at 3 minute information on volume, and now we'll look at the 15-minute information on volume as well. And whenever we want, we can change this to look at what is 30 minutes doing. So a no demand, again a no demand, and countered by no supply, and finally pushes through that. And there is no supply when it came to the lows. Also on the daily, if you see, there was a no demand bar there, that on Thursday it broke down with huge supply coming in. Now it broke down, but it's the first breakdown, there is no distinct trend, so becomes a shakeout. And on the second day, when there is a bar which stays inside the range of this previous bar, Tom Williams, without the volume information, used to refer this as a 2 bar stopping volume. So any one of the bars has volume, but combined together it is going. Otherwise, see, if this was completely inside, or would have gone up from inside, would have become a pseudo stopping volume. But otherwise, this becomes a 2 bar classic stopping volume. So in case this wants to go higher, now in coming days, I'm expecting a revisit of 8360 zone, because the reason is that this needs a test before smart money can keep on marking the prices way higher. And if that test fails, that will be a bigger information. So need to now see what happens is, like if you see this, the SAR had gone negative. Let us check where the SAR is. See, the SAR went negative, and it traded down till here. It comes back here, it's going positive intraday, but there was this reference here, so we ignore that SAR going positive. But in the end, when it's again pushing through that, even if we don't do anything now, the next day open gives a clue, and we know that the open is above this reference where it had touched on the previous day. So the SAR is positive, even if somebody did not take above this average price. So now the SAR is at 8421, and by the time we trade today, it will reach maybe 8440 kind of zone. So everything starts matching with each other when we are doing analysis with a particular objective, and every theory will meet almost like in the same zone. Now let's have a look at the Renko. Also, the weekly projected range was 8474, so that is also met. And now as it is, it's no, it's still the third day of the week, but tomorrow being a holiday, maybe on Friday we'll have to see, because once this high is taken out, there is less chance that in this week we see the lower level. Now a very dicey rotation, very slow rotation. There is no impulse. One impulse comes, but then again goes sideways, and finally a breakout. test a minor retracement, not a good test or a good retracement, and then again a second impulse, again the similar behavior, and the third impulse. Now we have this as a reference, 8444, because that is the VH of this value, as well as, if you can see, it's the mid of this and the fairest price, the highest traded volume here. So we'll consider that as a level to watch today. And that's what I'm thinking, is that even if it goes higher, if it goes higher and then pulls back below 8,500, then I'm still expecting it to go there. So what I will do is, like, because I'm not trading, so we'll just keep a watch on this, and maybe on Friday. No, we still have one trading day, I think. Not necessary on Friday. Yes, we have 2 trading days after that, so I don't want to create anything on Friday as well. So from here, let's see what is the likely scenario. So if it opens above the range, then push back into the range, try to push back up. If it fails, then slowly and gradually make its way into this. Maybe trade into this zone once or twice if it wants to go lower, and then all of a sudden late part of the day break down below this and finally come and settle somewhere into this range. That is one of the scenarios. Let me see the higher levels. So that can be the scenario 2 as well. And if it opens gap up, checks back, does the similar behavior to yesterday, and then tries to pull back up, and then finally pushes up above the 8550 zone to check what lies there, fails there, comes back into 8550, tries to test back, and then finally settles somewhere into the 8510 8520 range. So that is the scenario which I am expecting. Now let's have a look at the Bank Nifty. Now Bank Nifty opens, similar behavior, comes down and then pushes up. Now after the push-ups, there is a nice taper on this TPO profile, and that taper is saying that there is no buying interest on the upside. Now 2 false breaks. This was a nice ledge forming on the lower side. 2 false break. Then again, all of a sudden, from the highs, it covers the entire range. A failed auction in this period, and then does the other side. So if we merge the profile, looks like a long liquidation, but obviously it's not a long liquidation because the close is at the highs. Similarly, in this also expecting the same thing. If it's not able to push above 19140 kind of zone and falls back into this fairest price around 19030, then expecting push into the 985 kind of zone, 18985, and maybe give an expiry somewhere into that range. Any push below that, I'm expecting to go lower into this and pull back up and expire into the 18900 kind of range. Now let's have a look at the 1 minute chart. A very weird spike happened in the last minute. So that's somebody is getting trapped and somebody is enjoying, it seems. Now a channeled move down, breaks out, a false breakout, comes back into the channel, breaks the channel on the other side, then a bearish flag which could not break down, broke out, and then again a channeled move up, but a spike which spoiled that channel a bit. So Bank Nifty seems to be doing great. The way it generates volume and the way it's trading nowadays, at the average volumes are going higher day by day. Now on the 15 minutes, the same sort of behavior continues. Comes down. There are sellers stuck here. The moment they get some push from the buyers, it goes higher. Now again, when it reaches here, trying to find if there are any sellers here, but there were none, so pushes back up. So that is on the 15 minutes. Now let us see, where's the Renko. Okay, so let us do this 60 ticks, 120. Cool. So a channel move down, a zipping move. There was an impulse in the opening minutes itself. Obviously, cannot trade this, and then tries to create. See, now this could have turned into another impulse here itself. Does not do that. Rather, it goes in an impulse into a down move, pushes back up again, a zigzag down move. All of a sudden, another zipper. Now see, when this happens and when there is a zipper happening, when this there is no impulsive action happening on the lower side below the low of the previous swing, and there is a zipper happening, we know that the move might be opposite. Now it does this, again a zipper there, and then pushes back down, again no impulse continuation into the down move, and finally pushes higher. Does the same scenario. Now after this break is where we consider that it might go down, otherwise it's very rare to go down. And then finally so this impulse, pull back, impulse, pull back, and an impulse, a very clean move finally. Now what we can expect today is, in case it opens above the range, then try to push above this 19140, pull back, again test, come into the range, try to reject initially. If it rejects, then it might go here again higher, and if it doesn't reject, then start accepting into the 19,000 zone, try to push back and make its way down into the lower levels. So that is one of the scenarios. And in case if it, so now suppose in case if it opens here, so this scenario we need to calculate, or we need to calculate this scenario. So this scenario becomes like this, then if the open is here, and in case it tries to open directly push up, then this scenario comes into play. So any which ways we take over from one scenario to another when it is going somewhere else than what we expect. So I think that's all. And what we'll do is on Friday we'll see, and before on Friday we'll get a fair idea what the FIIs do post this expiry, and Monday and Tuesday I think we'll need to prepare, see all possible scenarios, and then get into the trade. Do not want to just jump in on the 1st February when the budget is going on. So that's it for today. Thanks for watching, and have a nice and profitable day ahead.